But from pharmaceuticals, which is clearly the flavor of the day, let's shift focus now to IT, which has also been quite the darling of T Street. And who better than Rahul Bhasin joining in right now, partner at Bearing Private Equity Partners India, to talk about the prospects of IT sector and where are the new opportunities within IT. Rahul, hi, morning. Good to have you in the show. Hope all's well.
Very good morning. Yes, everything's good. Luckily for us,
okay,
the kind of
good to
businesses
hear
that
that all
invest in,
safe. Rahul, it's all about...
Go ahead, please.
Right. Just wanted to assess, Rahul, the kind of opportunities that one is now seeing in new technology, be it Internet of Things, be it AI, be it cloud, be it big data. What the COVID pandemic has done is it's brought about a huge shift from a personal level to organizational level. Across the world, there's more focus now on IT because everyone's disconnected, isolated. And IT clearly has been the backbone of the way we've been living, the way we've been working. Where do you sense big opportunities come by within the IT universe?
I think you were quite right in the sense IT is actually the big growth sort of horizon at this moment. And I think that everything which feeds into that, whether it is the enabling ecosystem, which means the telecom, the fiber, producers of that, people who speeden that up, people who make it more stable. That whole ecosystem, of course, is a big beneficiary. And then after that, if you think about it, it's really about everyone who facilitates gathering large amounts of data, whether it's the IoT, which gathers data from inanimate objects, whether it's the industry, the cell phone industry, the wearable industry, which gathers data about people, where they are, what they do, what their interests are, the cloud, which helps store data securely and access it very easily. It's that whole ecosystem, and then the layer of intelligence or artificial intelligence, which actually exploits that data, gets insights, and takes us forward. I think one of the most interesting things today, which has happened, and very clearly, if you think about it, what's top of everybody's mind? COVID. And what is COVID doing? And there was so much research, there was so much, it suddenly hit us, it changed everybody's lives overnight. And everybody was sort of floundering as to how to treat this, what is this disease, what is this not. And everybody came out with strange symptoms. Somebody's lungs were affected, somebody's heart was affected, somebody had something called COVID toes. And there was a lot of data floating around, but however brilliant people are, no one could actually figure out what it was all about. Till a gentleman called Dr. Jacobson in Tennessee, who runs the national laboratory, the Oak Ridge National Laboratory in Tennessee, which is one of the fastest supercomputers in the world, took 17,000 samples and just fed it into the computer, put in a self-learning algorithm in there, in the lines of AlphaGo in there. And they came out with the hypothesis that this is something like a bradykinin storm, which is completely different from what everybody felt it was. They've come out with drugs, they've isolated drugs which can be used to treat, which have straight away been taken into clinic. They've also figured out that this is the effect of COVID is very therefore been able to explain why there's a difference in mortality rate between men and women in this whole space. But if you think the core of it, and I can sort of elaborate more of the insights they came up with, but the point I really want to make is that what they've done is they've harnessed a lot of data, used the new computational tools, used the fact that now computation happens so much faster, and been able to glean insights which are going to differentiate how that industry works and how we as a human society evolve. And I think that this is very fundamental across industries. This is true in the marketing space. This is true in financial services and risk assessment. This is true even in home decor. This is true in managing personal health and understanding how much one can push oneself or not. So if you actually look at it, to my mind, the key differentiator, the key success factor driving industry as a whole going forward, maybe the next 10 years or 20 years, is core to understanding this whole ecosystem.
Sure. So, how, Rahul, would it translate into IT? And the sector back home is services, whereas in the global front is where the innovation within products is happening. What with Apple coming out with its latest watch, which now levels or monitors even your oxygen and blood levels, would it be that which is going to gain traction, product innovation, or would it be services because the world now needs IT?
If you think about it, like I mentioned, all industries need to be able to harness the power of this technology. Right? Apple is one example. And if that is the case, then who's going to help them do it? It's our IT service companies who are going to help them make that transformation. To understand what data they can gather, what is relevant. Any product manufacturer wants to know how to make his product last longer. So he gathers information when it's in use, whether it's a washing machine manufacturer or a car. I mean, Tesla actually states very clearly that we want the Tesla car to become better as you drive it. Not that it's getting older and, therefore creates problems for you, but it gets better because it understands where you drive, how you drive, the circumstances, the traffic situation, and then they can remotely adjust the height of the car. They can remotely adjust, the suspension of the car. It's quite fascinating how much you can do by just gathering that insight. I mean, if you look at marketing and the entire marketing, it is, I'll give you a very simple insight so that people can relate to it. But it's very clear now that if you're selling a product which gives you comfort, gives you a feeling of well-being, gives you a feeling of safety, then using a background to that color of a light blue actually helps convince people much more. If you want to sell a product which denotes or facilitates excitement, something euphoric, something delightful, then using the color red helps you do that, right? So it's where does all this come from? This has come from just gleaning huge amounts of data, parsing it, and seeing how these kinds of things impact behavior. Now, you can't do this with small amounts of data. So large data, the computation of large data, managing of those databases, understanding what's relevant, getting the insights and driving that, I think that makes a huge, huge difference. I mean, your companies like your Bajaj Finance, etc. in India, they are actually, their success is incumbent upon this entire phenomenon that you gather a lot of data, glean insights, and you compete. Now, that's in financial services. You're seeing this kind of behavior take place in the agrochemical industry also. You look at PI industries, they do something very similar. So if you look, it's not that this itself, of course, there's opportunity to invest in the industry and the entire sort of space directly, like we do a lot of that also. But I think that this will become widespread. This will become like, to understand the competitive dynamic and the sustainable competitiveness or the incremental return on capital employed over any period of time, one has to be able to gather and understand this insight and understand where this is going. And almost all our large IT companies have figured this out and have got solutions. Now, of course, there is some degree of differentiation about where they specialize, which domain they know better, which ones they don't. But I think that they are the ones who are going to facilitate this transformation, not only in India, but...
Right. Fair point. So, Rahul, I'm tempted to ask you about this new look. For a minute, it took me not 2 seconds, but today 30 seconds to recognize that am I talking to the right person?
Yeah. Well, very honestly, I walked into a barber twice and discovered everybody coughing and walked out, and then I just gave up on it. So I think one fine day you'll find that I'm back to looking like the way I was. But for now, I'm sorry, but your viewers will have to tolerate this look.
Well, the girls in my office were asking, so I must tell you that.
No, no, no. Nikaj, the ladies in the office are comparing
Okay.
him to Tom Hanks
Rahul-
from Castaway right now.
You're being very kind, I must confess. Usually the expression troglodyte is being used and bandied around while referring to me, but this is reasonably kind. I think, Nikunj, I think one
Okay.
of the things... Sorry, go ahead.
No, please finish your point.
Yeah, I think one of the things that is very important is that if you look at the current ecosystem, you look at the current environment where, the central banks combined, they've actually monetized the global economy. The world global economy is about 80 trillion. They've printed about 15 trillion. So there's a 15 trillion increase in M1. Forget about the implication on broader money. And there's so much, there's so much devaluation of money, right? And you have so much money with negative interest rates at this moment, including the latest issuance in the US also, that asset prices will tend to get frothy. Now, the issue and the big challenge is that if one invests looking at historical P multiples or looking at, returns over the next 3-6 months, one will flounder. So really it becomes that much more imperative to focus on investing on the basis of structural drivers of change and competitiveness. And if you get that right, you might get 3 months, 6 months, 12 months wrong, but you'll get the 3-year, 5-year investment picture correctly. And I think that's what's relevant about most of these spaces. So if you see a lot of investments we've made, they're much smaller than our typical investments. We invested in Home Lane, which is using technology to render what a person's home will look like, and actually using all kinds of supply chain, insights and data gathering into supply chains to render a person's home complete within 45 days. We've invested in a company called Fourth Frontier, which is actually looking inside you while you work out or you push yourself to make sure that all your vitals are in good shape and warns you before you can do any damage. Not as a post-mortem when you've done damage telling you what you did wrong, but warns you before you do the damage. Again, a lot of data, a lot of algorithms to actually understand multiple vital systems within this thing, process that data and give you that insight instantaneously. We invested in ACO, which is using insights on behavior and changing behavior and using the digital economy to sell insurance. We've invested in MyTouch, which is essentially taking video analytics, labeling different kind of video analytics around the world. They can give you a trailer if you want for a movie, or give you a sports highlight or something using an algorithm. Right now, there's no manual intervention. And just think of the productivity change. Now, these businesses will do well regardless of where interest rates go, whether whether you get a fiscal incentive from the government or you don't. You don't have to worry about some of these, what I call monetary drivers to manage your returns.
So Rahul, my question again is, let's say we are trying to use your experience and your insights so that our viewers can benefit from it. If somebody is, let's say, saying, look, I want to invest in IT in this pre-COVID world, in the listed space, the options are the listed companies, the TCS and the Infosys of the world. You also have investments in some listed companies. Do you think Indian IT companies have potential to go back to a late teens or somewhere mid-teen kind of an growth because of COVID?
You might get short-term spurts in different segments, but the bottom line is this industry is significantly larger than it was, 15, 20 years ago, all right? Which was the heyday where every company grew, if it didn't grow 10% quarter on quarter, you really wondered whether the management was up to speed or not, right? That's not going to happen. I mean, you're talking of a significantly higher base. You're talking of an industry which is so much larger. But what you will see is that you will find innovative sort of applications of some of this technology, and you will see Whether the service companies do it or you'll see spin-offs of people who actually garner that insight, you'll find software as a service picking up speed, according to me. So that whole trend at this moment will pick up. So all kind of SaaS architecture will pick up today. And it's such low cost of capital. Product development is something which is going to pick up around the world. So companies like Persistent, etc., will benefit disproportionately because of that feature. Right? Because people invest much more in innovation when capital costs are lower, and you're seeing that phenomenon. You're seeing that translation into revenues. So I guess one has got to look at the user industries, got to look at changes in the user industries and the business mix of the IT company, and one will get a sense of it. And for those who are not so savvy with this, I think if they bought and invested in the majors, whether it's a TCS, Infosys, an HCL, etc., I think people will do very well anyway. You'll get 4-5% over risk-free rate of return any which way. Not over 3 months or 6 months, but if you take a 5-year view, for sure.
So, do you think one should lean towards platforms in today's time, because that is the buzzword in India, that is the buzzword globally also, the whole thought of network effects? How real is that? Because you got platform companies in India, whether it's Apple or India Mart, they are trading at P multiples of 70, 80, 90 times. What is your view on this entire platform and network effect which is getting created?
I think it's important to look at the world where it is, look at where the world is going to go, and look at who is taking the world where it needs to go. And if you are invested in companies who are taking the world to where it needs to go and is a clear market leader, then I wouldn't worry about whether the multiple is 20 or 40 or 60. You'll get handsome returns. If the market structure is itself evolving, you're not sure how that will play out, and you're not sure who the market leader is, then please follow cautious, proper margin of safety norms while making those kinds of bets. And remember that, if you just look at the US market also, just look at the market cap of Apple, Microsoft, Google, which is represented by Alphabet, Netflix. If you just look at this whole ecosystem, Facebook, just look at the percentage of the market cap that they represent and look at what it was 20 years ago, right? So you will have these kinds of companies which transform. They transform value, they transform the way in which we lead our lives, and it's important to understand that kind of transformation, where it's going, and invest behind, like I said, the companies who facilitate the transformation. People who don't have clarity on it, then, well, it's, you can't find the gold, invest in the companies who make the tools. And our entire IT services pack has not only the tools, but they have largely good governance architecture. So I would say, that's a fairly safe bet. But are you going to make those outsized returns? No. As far as these other companies are concerned, clearly platform, I think Bharat Matrimony and, Bharat Matrimony, Persistent are listed companies that we have investments in. Bharat Matrimony is again a company which has complete dominance on the wedding market. And whether you like it or not, I think weddings is something which is going to persist in such a young population. And from what I can see, the trends, if not once, maybe even twice. So that market, if anything, is just growing. And when you have that kind of network impact, when everybody else is there, then that's the platform everyone wants to be in. They're the market leader, and they're extremely dominant, and they make money. Now, is the entire ecosystem very competitive? Of course it is, because you have Jeevan Saathi, you have Shaadi, which are again good companies. But the bottom line is that when there will either be consolidation because some of these other businesses don't make money, or you'll have this margin fight going away, and you'll have disproportionate returns accruing. Now, this is true for these platform network companies. This inevitably happens. It's a very similar idea to what a NSE is in terms of a stock exchange, right? Once the buyer is there, the seller is there, it becomes self-feeding. And then you have an exchange driver of profitability, and that tends to be one very profitable and sustainable. And stock exchanges, you'll get regulators coming in and sort of clipping how much profits they can make, but I doubt whether that will happen in a marriage marketplace.
Yeah, sure. Interesting names, Rahul, that you talked about. But just one last question. Do you think the COVID opportunity has the potential for any of the homegrown IT companies to scale up to the likes of a Google or Facebook? Or do you think we'll always lag behind because it's about products versus services eventually?
Look, I think the crux of the issue is that you have... to invest in products, etc., you need to have risk capital. Risk capital in India is still very expensive, right? If you look at China, where the AI industry has really taken off, and they've got a whole bunch of industries which have taken off, the government has intervened in multiple ways to make the cost of capital for those industries zero to negative, right? I think if we did the same thing and we attracted the leaders in those different segments, I think that, if we as a nation, as a country, if we don't take AI seriously and we don't sort of try and bring the biggest players into India, ideally into one campus, and, if you do that, the ecosystem will develop, you'll get products, you'll get all of this, but you need the leaders to be here innovating. It's not going to happen if you try to figure out what is the need in the markets which have high purchasing power sitting out of India. One, you're sort of dislocated from the market. Two, you have much higher cost of capital. So I think it is something which requires policy intervention and leadership at a national level. If that happens, well, the talent pool that we have available here and the quality of that talent, we would become world beaters. But again, it's something which needs intervention, according to me.
Sure. Okay, Rahul, taken your point. Good to have you on the show today. Thanks as always for taking the time out. Good discussion.
My pleasure. Thank you.